All right, we are back in full swing here after the 4th of July holiday. Summertime trading officially kicked off, and there's a lot of movement happening right now. Our systems, our signals, our models and indicators, they are firing off. There are things that are shifting. We're going to talk about that throughout this video and to the second half of this video of what we're looking at and where some of those shifts are happening. Let's kick it off. So unfortunately, we're back to the ceasefire being over. The war has restarted again. Oil is higher this week. Energy stocks are higher this week. Equity markets, though, kind of shrugging it off. So not a whole lot of new developments here in terms of the market's worry, but we'll see how things progress. And we are once again just back in the thick of it. Now, on the positive side, or maybe the positive side, depending on how you look at this, let's frame it out. SK Hynix on Friday had their US debut. So for anyone who is unfamiliar with this company, it is basically now one of the 3 most important bottleneck companies for this part of the cycle. They are producers of high bandwidth memory, and they have now debuted their ADR shares in the US. They raised the largest amount of capital I think any foreign company has, 20 some odd billion dollars. And, you know, we have another sort of ticker here in the home US land to trade memory. We now have SKHY along with Micron. Samsung, unfortunately, still a little more difficult to get access to on the US side of things. The reason I say this is not necessarily a full positive is this is just more sort of a liquidity suck coming into the, into the market, right? It started with SpaceX and a lot of, these potential IPOs that are pulling pretty staggering amounts of liquidity into these new issuance. So we'll see how things fare from here. Of course, Micron, we talked all about last week. They had blowout numbers, stock range bound, right? So there's a curious kind of development here on whether or not, this poetically is marking some type of intermediate top in the memory names. Now, let's talk about Mag 7. So I posted this out at the beginning of June. All of our models were shifting bearish on the Mag 7, and they, were successful in getting that one accurate. We saw a decline throughout June, and as July has kicked in, we are starting to now see buy signals across the Mag 7 from our work. Meta was one of the latest this week to produce a buy signal. This was back, I believe, on Tuesday. So we can look a little bit more at that, but the Mag 7 are coming back into favor. Now, one thing that was very important this week, which you certainly felt if you were in some of the hottest, biggest winners of this year, was these momentum names getting flushed out. We are in drawdown mode, and pretty substantial drawdowns in lots of these sort of highly trafficked names. We're going to look at a bunch of them this week, but our Rockets portfolio, which is designed for concentrated momentum, saw 21 exits this week. So that was a large number. Really kind of pruned down the portfolio. And of course, these names had huge runs. Many of them were up 100% or more. So all good things have to come to an end, but you absolutely are getting kind of the cages rattled a little bit here in the hot money segments. And I think that did a lot. That was a lot of the story, I think, this week, whereas the indexes maybe are not telling you too much, but underneath the surface, there was a lot of things happening. And we're going to look more about that in the second half of this video. Financials. I posted this up here because earnings season is back, or it's pretty much back. Next week, we're going to start to get kicked off with the big mega center banks. I think we also have Netflix in there as always a early reporter. So we are going to be in earnings season now, and this is going to be, well, I guess like all of them, important to, particularly when you get into the Mag 7 and the spending that's going on. So before we go any further, our sponsor of this episode is Investors Business Daily. Check out the links in the description of the show. We got 2 offers for you. Market Surge, IBD Digital. Get discounts using those links in the description of this show. Thank you very much for the sponsorship, IBD. Let's keep going here. So this was the performance this week. Oil at the top of the list, up almost 5%. NASDAQ up 2%, S&P up 1%. Small caps took a back seat, and rates, they were higher. So S&P right now climbing back to the top end of this range. This still feels like summertime chop range bound trading. We're getting back up to the top here, so just be a little bit cautious if you're chasing breakouts and strength. Volatility index is plummeting 15, so we got a new kind of 1 month or multi-month low for VIX, and the US dollar is kind of just, still pretty strong from a 1 month perspective, but kind of chopping, giving a little bit back in just kind of, consolidating here more recently. Interest rates back on the move up. All right, so here we go. We thought we had a little bit of a break. I don't know what this little slanted line is there, but you get the idea. We were consolidating. We're starting to break out. Not a great thing if we're going to see rates continue to move up. Now, for sector performance this week, we had energy, tech, communication services at the top of the list, materials, healthcare. This was a big standout last week. I still like the sector, but giving a little bit back, and industrials on the bottom part of the list. Now, one thing that's not great is you're starting to see this dry up here, only a few days, but the number of stocks hitting 52-week highs is kind of, shrinking again. And I think this is largely explained because what's doing well this week? It's the Mag 7. And so you've got this kind of rotation reflex trade where the big stuff is working again. Money's kind of moving back into those things. Biotech, financials, materials, they're taking a bit of a breather, and we're starting to see the average stock decline. Percentage of stocks above a 20 SMA also now feeling like it's a little bit heavier and wants to come down. Put to call ratio spiking, coming back down to earth. Not too much to say about it. Bitcoin is, sticky strong. So it's, well, strong is certainly a short-term view on it, maybe. There's not much strength in this longer-term chart, but in the short term, it's trying to put in a higher low. It's trying to not completely roll over here. I think, we're getting ready for another move here pretty soon, and we'll see which way this one flips. So let's jump into some charts here and take a look at some more things. All right, so here's the S&P 500. This is the cash settled market, and this is the nice orderly range that we've been in now since, middle of May, basically. And we have made our way back up towards the highs here. Now, look, I wouldn't be surprised if we came in and made a marginal new high into next week before earnings season, but I'm a little bit hesitant to say that it's just off to the races here, especially with earnings season coming out. I think you're going to get the market maybe still wanting to just wait, digest, and get some of those guidance numbers coming from the influential companies that are driving the returns this year. But S&P, no matter how you cut it, is trading just under all-time highs. It's consolidated. It's not stretched or overbought. So, could it absolutely, break out and start legging higher? Yeah, absolutely. It could. The trend is favorable, and that is still the big deciding elephant in the room. Now, here's what has me concerned, and I said we would be looking at some of our model updates this week, is we've finally got a downgrade in our market environment model. Now, again, for anybody that's new, this is kind of fine-tuned for swing trading. So this is not some long-term, economic forecast on cycles and trends and, longer term things in the markets. This is made for swing traders. And so we downgraded the environment for the first time since April, middle of April. We have been enjoying kind of a bullish market backdrop. We thought they were good tailwinds. We've been rewarded for staying involved in the market. And finally this week, for the past 3 days now, we're in this mixed swing environment. Again, that's not a bearish environment. Let's just be clear. But that's why I made the quick comment earlier about S&P 500. I'm a little more reluctant to buy breakouts right now, especially when you have this backdrop. Just says that breakouts can just be a little more stubborn. Doesn't mean they can't work. Mixed internals. Sector and leadership and this industry participation's kind of been, toggling back and forth for us. They're still supportive, but, the real big driver muscle movement is this reading here for us based on our research. And so I'm going to hang my hat and put the evidence behind this. So we got a downgrade. It's in the mixed state. Let's see how this shakes out. You can see back in history here, subscribers can go back on this chart and see prior states, but generally speaking, that is important for us. That is important to take note. If we look at sectors here from our outlook, again, you can see most are still positive. So there's been some back and forth, but supportive overall. Mag 7 has been the big turnaround over the past week or two. So 5 of 7 are constructive. If you watched a video 2 weeks ago, we had 7 for 7 in kind of the bearish avoid, sell, exit status. So these stocks are working again, and this is where you're getting this shifting once again of like the breadth, the rotation, the small caps, the average stock, and now we're kind of shifting back to these big heavyweights. Of course, again, earnings are going to be so important for these stocks. We're still waiting on Microsoft. We're still waiting on Nvidia, but I would imagine that would turn up pretty quick. Otherwise, we're getting pretty constructive readings here. Now, let's go back to the actual price action, and then we'll look at some momentum ideas at the end of this. Oil, I think, was a big one this week, right? We talked about the reasons why. It's effectively the ceasefire being over. Oil has been in a 7-week decline here, so it's off from its highs over 30%. It's trying to pop now. XLE, which I definitely came into the year bullish on, and maybe a little too bullish because it's been kind of chop central in here. Had been saying it is a great macro position to have in the portfolio. I still believe that it is still just a frustratingly kind of chop period for it. Our model has been kind of dancing in and out of it in different points, but it has reclaimed the April lows. You're getting a little bit of a life and rebound here. I do think it's an orthogonal bet in your portfolio if you're specifically in like tech and NASDAQ and heavy, beta stuff. This obviously is just a little bit on the other end of things. And let's not forget, if we look at the yearly performance, we're up 23%. So it's still one of the best performing sectors, even though it's at the bottom end of this range. So that's where I'll leave it for now on XLE. I think this week we mentioned, of course, the importance of XLF because of the heavyweight financials that will be kicking off next week. We're back to prior all-time highs in the XLF, and Biotech. So this is the latest momentum craze kind of chase rotation play was XBI. You could look at IBB as well. So either of these ETFs will serve you the right way. XBI, though, certainly getting hit this week. I think this was off... was it AstraZeneca? There was news, obviously, that caused this 4% kind of knee-jerk down. I didn't get to read up on it yet, but this is now in kind of pullback mode. Today was a heavy volume traded day, so let's pay attention to this early next week. Let's see if this can settle out, maybe 2-3 days down, 4 days down, and we can start to think about maybe a higher low. I still like biotech. I still like healthcare. I think these areas make a lot of sense. Now, in terms of some of the destruction, so we looked at the S&P 500 and we say, hey, we're back at highs. The Q's more in the middle of the range, not quite at highs. Where's all this destruction? Well, if you look at something like SanDisk, which is now on the recovery, but this was at the lows of this week in a 37% decline. If we look at something like ARM Holdings, this was also in about a 35% decline, 37% decline. If we look at Iron, which is in this kind of, infrastructure play for GPUs, you're almost cut in half. Rocket Lab, right? We're all over the spectrum here but it's just high beta momentum kind of names that thematic plays in various sectors. Rocket Lab down 47% and testing new lows. Nebius, not as bad, but still down pretty sharply. Again, space, UFO. Look at CoreWeave off its highs. So this is where you effectively have bear markets in these types of stocks, if you want to use the classic 20% definition. So Bloom Energy, right, also off 33%. Now, 33% for Bloom Energy actually doesn't even look that bad because it's up a zillion percent in the past year. The point is, there's that wreckage underneath the hood while the indexes stay flat. So your mileage varies this week depending on where you had exposure. Like we looked at with Quant rockets, we are trading lots of these hot names that were up, multiples of percentage, and we're getting flushed out of them in our quant models as well. So that's what's happening underneath the hood. The good part is you're setting up the new opportunities. You're setting up the new kind of momentum leaders potentially, or you're waiting for these to reset and regain leadership status. I think that's what we're kind of waiting on here. So given that backdrop, let's take a look at quant rockets. We're going to look at all the stocks on our list this week because there's only 13. This is the shortest, the least amount of stocks we've had in the portfolio since the beginning of the year. So we got a good cleansing. It's always a little painful, but I think it sets up the nice big waves. So let's look at our first ETF in this case. This is LABU. So we talked about Biotech, we talked about liking Biotech and the breakout. Well, we own it in the 3X ETF. So we purchased it 16 days ago. It's still up 55%. It was down very big on Friday. We've hit 2 profit targets in it. You can see where our exit zone is. So that's the way we're kind of structuring this. I wouldn't be surprised to see this come down more. Hopefully we can stay in the trade and, continue to ride a fresh uptrend. ALAB, this is still on our list. We did not get stopped out here. So this isn't semiconductors, but it's staying pretty firm. You can see our stops around 360 or so. We've hit all our 5 targets. We were in back a month ago. So we're in a pretty comfy spot. We've scaled out, but you can see we're still hanging in there. NTRA, I still like this one. This is healthcare biotech. So that's still working for us. Duolingo, kind of the software play, still hanging out here. This one's a long grinder. We've been in here for almost 2 months, not a tremendous amount to show for it, but it still hasn't given us enough of a reason to get out. So we're still hanging on to that one. Credo, this is still working. This is another semiconductor name that we survived in because a lot of our semi plays got flushed out. The Marvells, the MU, if you want to include that, the SanDisks, Western Digital, we got wiped out of all those from our trailing stop losses, but we do have some survivors here. If we go down our list again, Net, one of my favorite companies long-term, especially for this cycle, back into this. It's been a choppy one to trade, but we're in it. Small caps, we still hold the leveraged ETF here in TNA, not a tremendous amount to show for it, back to our entry price, but you can see our exit is also pretty close. CLEC, so it's another biotech name that we got involved in, pulling back a little bit, earnings gap up here. HL, so this is a mining company that we ended up getting involved in last week. We're down a bit on the trade, but we're still hanging in here. Datadog, back into this. So we had a nice trade in this. It was a great gain for us. And then we kind of got back involved not too long ago. And then last but not least, Figure, again, one of my favorite companies long-term. I think they're still in the show me, prove me phase. And because they're tied to crypto, they are just, kind of left for dead in the cycle. I still love Figure, still like the company, the execution there. So that's a good one. But the stock is trying to get that momentum moving. So that's it. It's a tight book of portfolio names right now. And I've been doing a lot of work on this portfolio. I'm going to start to curate a tighter portfolio view for momentum. And so instead of having a lot of names in the book, which we might still have, there's going to be a portfolio view. So there's some fun things coming, always developing here on the trading systems. But especially for quant rockets, the momentum got flushed. The list is small. It's not a bunch of extended names that have been on there for 3 months or so. So if you're looking for a momentum swing trading system, if this is what you're trading, end of day only, so you don't have to stay glued to the screens, now's the time to take a look, jump on our trial, and see if this can be a good fit for you. So that's it. That's what I have for this week. Hopefully we'll get some clarity here on this leadership, this range, this rotation as we go into earnings season, but I would expect volatility to probably pick up a little bit, and keep an eye on our market environment. Like we talked about here, it's not as pretty and clean and easy for swing trading right now. And I think until I start to see the evidence, pick back up in our models, that's what I'm going to be sticking with. Is it's good to have a little bit of cash on hand, maybe a little bit more conservative, not be so aggressive chasing breakouts. That's the way I'm going to look at things. So thanks as always for tuning in. Hope you have a great weekend. We'll see you back here next Friday. Take care.